Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hi everyone, this is Lex Levinrad with the Distressed Real Estate Institute. We've got another lesson here for REI Classroom, and this one is about the long-term benefits of investing in income properties.
This REI Classroom real estate lesson is sponsored by VirtualStaffNow.com.
Okay, so if you're thinking about investing in real estate, especially if you're a new investor and you've never purchased a rental property before, or even if you're an existing investor, maybe you have a rental property and you're feeling a little discouraged, what I'd like to do is break down 5 key important points for you to consider when looking at rental properties. And I'm going to show you why focusing on the long term is much more important than focusing on the present. Okay, so the first thing is you buy real estate for appreciation. Now, you might have periods of time where real estate goes down in value, like we had from 2008 to 2007 to 2010, let's say. We had a period like that back in 89 to 94 as well. But if you look at it over the long haul, just take as an example the U.S. housing authorities median price of a single family home going all the way back to 1964. You can get that online. You'll see how much real estate has appreciated over the long haul. So any 10, 15 year increment, real estate's gone up. So appreciation is obviously one huge benefit. But that's a stated benefit and everyone's aware of that. What a lot of people don't realize is the other benefits that you get. So let's go through those real quick. First of all, depreciation. Current IRS regulations allow you to depreciate a single-family home over 27 years. So what that means is that if you have a $100,000 house, every year it's worth 27% of 100,000 less as far as the IRS is concerned. Now, that doesn't make any sense, but that's what they do. They allow you to depreciate it because it's an asset. So that depreciation is an actual expense, which is a tax deduction and offsets your income. Okay, so that's the first benefit, depreciation. And over the years, if you hold a rental property for 10, 15 years, that depreciation expense can be substantial, tens of thousands of dollars. Another item that you have, other than appreciation, is amortization. Okay, so let's say you have a mortgage payment and your mortgage payment's $1,000 a month. Let's say your rental income is also $1,000 a month. When you look at it on the surface, you might think you're not making any money. And you're right. Your cash flows break even. However, as far as your tax return is concerned, you'd actually have tax benefits because the depreciation expense would show up, right? So it would show that you're losing money, even though you're not. But the big kicker is the amortization, meaning on that $1,000 a month mortgage payment, it could be $900 of interest and $100 towards principal, which means every month you're basically reducing your principal balance that you owe by $100. So it's almost like a forced saving plan where you're being forced to save $100 every month. As the mortgage matures, okay, and goes closer to its expiration, let's say it's a 15-year mortgage, by the time you get to year 5 or year 6, you have substantially more than $100. You might have $300 or $400 being paid towards principal. So now every month it's a forced saving plan, and so the amortization can also be a substantial benefit, right? And then so we've covered so far cash flow, we've covered appreciation, depreciation, and amortization, and we've covered the tax deductions. Other items like property taxes and insurance, all repairs, maintenance, anything that you have to do to fix the house, all of that's deductible too, right? So the final thing is cash flow. Now, cash flow, using that previous example, $1,000 a month rent and $1,000 a month mortgage payment, you might think, well, you break even cash flow, but you can typically increase rents at 3 to 5% in most markets. In some markets, they're going up a lot higher. I have rental properties with leases at $925 a month that 1 year later, I'm increasing the rent to $1,150 or $1,200, which is substantially north of 5%. But even using 5% as a rule of thumb, on a 5% increase of $1,000 a month, next year will be $1,050. The following year will be $1,100. The following year will be $1,150. The following year will be $1,200. So even if today it might have been break-even cash flow, within 2 years it could be making $200 a month. And if you fast forward over the years, by the time you get to, let's say, year 10, well, just fast forward those numbers, you could see you could be easily at $1,600 a month, and now your mortgage payment is $1,000 a month. So now every month you've got the $600 of positive cash flow coming in. So if you take the positive cash flow benefit plus the tax deductions plus the depreciation expense plus the forced savings plan with the amortization, you can see how even with a rental property that appears to be break-even cash flow, it can have substantial benefits for you. The problem with most landlords is they don't think long term. All they think is, I have another repair, I have to pay for it, I'm not making any money, and many landlords quit. But if you can just sit in there for the long term, you will see the long-term benefits of owning income properties. Okay, so once again, this is Lex Levinrad with the Distressed Real Estate Institute, and I want to see you guys all out there. I always say to people, if you rent, figure out a way to buy your home, and if you already own your own home, figure out how to buy just one rental.
VirtualStaffNow.com is the leading virtual assistant provider for real estate investors. As busy real estate investors, there's nothing more valuable than our time. And VirtualStaffNow.com not only helps you find the right real estate virtual assistant for your business, they train them on an ongoing basis, manage them daily to make sure they're staying productive and effective. And in the event they're not the right fit or need to be replaced, they handle that for you too. Whether you need 1 or 100 virtual assistants for your team, start the process right now at VirtualStaffNow.com. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of FlipNerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at FlipNerd.com. Please check out the FlipNerd family of real estate investing shows, where you can access hundreds of expert interviews, quick tips, and lessons from leaders across the real estate investing industry. They're available at flipnerd.com/shows or simply search for FlipNerd in the iTunes store.